Good morning and welcome to the Business Lens on Rapid TV Abuja. It is great to have you with us on this edition. Business Lens is where we look at how the numbers and figures directly affect you and your businesses. My name is Divine Alex. So let's begin with the key business trends that matter right now, starting from the headlines. Nigeria's food import bill declined to $2.34 billion in 2025, which is down 7.37% from the $2.53 billion that was initially recorded in 2024, according to the data from the Central Bank of Nigeria. Now, while the country remains dependent on imported food products, the decline points to a moderation in food-related foreign exchange demand. The data also showed that food imports accounted for a significantly smaller share of total FX utilization, which dropped from 9.49% to 4.97%. And overall foreign exchange utilization also rose sharply to $47.17 billion during the year. And to the next, where Nigeria's debt service burden remained a major strain on public finances in 2025, with the federal government spending 12.52 trillion naira on debt servicing between January and September. And this is according to the third quarter budget implementation report. This figure represented more than 67% of total government revenue during the period, meaning that for every 100 naira that is earned, we have over 67 naira that goes into servicing debt, existing debt obligations. Now, this development highlights the growing challenge of balancing debt repayments with spending on infrastructure, on social services and economic development priorities. And to the next, which is really interesting, is the one with President Bola Ahmed Tinubu that has defended the removal of fuel subsidy, arguing that the policy actually saved Nigeria from a looming fiscal crisis and created the foundation for ongoing economic reforms. Now, according to the president, the decision helped prevent bankruptcy by reducing the heavy burden on subsidy payments on government finances, while creating room for broader reforms aimed at stabilizing the economy. Now, although the policy triggered higher living costs and sparked public criticism, the administration maintained that it was necessary to restore fiscal sustainability and support long-term economic recovery. On to the next. The African Development Bank, AFDB, has projected that Nigeria's economy will grow by 4.1% in 2026, driven by higher oil production, expansion in the services sector, and increased public investment in critical infrastructure such as electricity, the transport, and logistics. However, the bank expects growth to slow to 3.7% in 2027 as global oil prices ease, reducing external revenue inflows and highlighting Nigeria's continued vulnerability to developments in the international oil market despite ongoing economic diversification efforts. And to the next, Nigeria's electronic payment ecosystem could face significant disruptions as the Association of Point of Sale Service, which is the POS providers, has threatened to suspend the acceptance, processing and switching of Verve card transactions if regulators fail to intervene in an ongoing dispute over alleged anti-competitive practices. Now, the association alleges that certain market operators maintain exclusive control over Verve transaction processing, and they also impose charges beyond regulatory limits and engage in practices that undermine competition and the financial sustainability of payment service providers. Now, they say if unresolved, the dispute could affect millions of electronic payment transactions and pose fresh challenges to Nigeria's fast-growing cashless economy. When we talk about POS, it touches everybody because most of us are usually very, now we have become so used to, running down the street to make any transaction instead of rushing to the bank. And this has, somehow improved the fact that a lot of times when you have an emergency and you need to sort it, you could just swipe your card, just go to the POS people, make the transaction, and quicker you get your funds. And if they are now threatening to do this, it is definitely going to hit hard on Nigerians. Now, away from that, let's head straight to the market. The cryptocurrency market recorded one of its sharpest sell-offs of the year, as renewed geopolitical tensions in the Middle East triggered a wave of risk aversion across global financial markets. Now, Bitcoin fell more than 4.5%. dropping below the $73,000 mark to a six-week low of $72,650, while the broader cryptocurrency market lost nearly $90 billion in value in a single trading session. Now, analysts say the decline reflects investor concerns that escalate geopolitical risks could undermine market sentiment and drive investors away from the risk assets such as cryptocurrencies. Now, we'll be looking at these stories and more after the break. My name is Divine Alex. Stay with us. You're welcome back. This is still the Business Lens of Rapid TV Abuja. My name is Divine Alex. Now, we gave you the headlines, and today we are examining a number of developments shaping Nigeria's economic outlook. Now, we're going to be going from the rising debt servicing costs and the decline on food imports dependence to concerns over the sustainability of economic growth beyond oil. Now, we'll also discuss fresh risks in the digital payments ecosystem, the volatility in global cryptocurrency markets, and what these trends mean for investors, for businesses, and to ordinary Nigerians. And to make sense of today's conversation, I have with me our usual analyst, economist Abiola Adekunle from Keto Markets, and Daniel Efa, who is also a global business analyst. Good morning, Daniel. Good morning.
Good morning.
It's great to have you here. How did you find your way to this place since it's raining and the weather is just giving sit-at-home vibe? How did you push, past that to make sure that you were here in the studio this morning?
Well, we analyzed the value of RapidTV, side by side. Our need to be here.
In a chart?
Yeah, in a chart. We used histograms and bar charts. And Daniel also contributed.
Did you, start a poll? How was the poll?
I only observed.
Okay, it's great to have you here. Yeah. Now, let's start quickly to the conversation we have on ground. And let's start from the first one, which is Nigeria spending 12.52 trillion naira servicing debt in the first 9 months of 2025. Now, this is like every 100 naira that we earn, we are using at least 67 naira out of it to service debts. What does this say about Nigeria's economy? Let me start with you, Daniel.
I think it's even getting better. It was
I was about to say that.
It was 100% at some point. So, but then I think that with the way we've removed the subsidy burden from the fiscal structure, one would think that that should have maybe gone to figures around below 50%. But then, if it is still high, it means that we are still in very risky territory, because if you look at the debt stock that as it keeps increasing, right, and so you begin to feel like and our budget keeps getting larger, which means that more debt is required to fill the hole. So when you look at that figure, it gives you an idea of the fact that we are not out yet. We only just what's the word? Did a quick fix, and until we really start making actual revenue, because you can see from two angles. Either the debt servicing is too high, or the revenue is too low, right? So, but one must give way for one for it to make sense. It's either you bring down the debt service, which is likely not to happen because you can't stop paying your debt obligations. So the only thing has to be you have to increase your revenue, right? So that, because if you service your debt for 67% of your revenue, that means you have to take 3% to pay salaries, which we will most likely do, which will take another maybe 15-20%
or more,
or even more. So what is left for development? What is left for infrastructural development? So it's a very terrible way of fiscal management, and I feel like we didn't just get here in one day. It was a process. Like we kept on tying ourselves down till we got to this point. So at the end of the day, what would give way might be the fact that ideally might be just to reduce your costs of running your government. If you reduce that, for example, let's assume that takes you 25%, 30%. If you reduce that by 20%, you have 10, 15%. You still have about 20% to still run infrastructure, healthcare, and all that. So we are in a very funny situation, and it's not something that I would like to be in as a fiscal. So the Minister of Finance really has his work cut out to really take us to the next level in terms of our fiscal approach, because you cannot build a country or a nation if you have this kind or this level of financial commitment that really strains your budget, that doesn't allow you to basically move forward.
Okay, thank you for that one. Now let me come to you, Economist Abiola. When we look at the fact that our major income is going into debt servicing obligations, what sectors are likely to suffer the most when debt consumes most of our resources?
When you don't have enough money to take care of yourself, I'm looking at it from an individual point of view. What are the things you dedicate money to first? Your survival. So we are talking about the basic things of life: food, clothing, shelter. So if you look at it on a country scale, if it comes down to it, the first thing the government has to do is they must pay salaries, whether they like it or not. The recurrent expenditures have to go out. Then we now start looking at capital projects. So if you look at it in bulk, capital projects, first of all, suffer more. Because if you don't pay your workforce, who is going to implement the capital projects? So first of all, recurrent expenditures have to go. They might not be able to do 100%, implementation, but they'll pay. Now, if there's a bridge somewhere, if there's a capital project somewhere that needs to be done, most likely we'll now have to choose which is more important. So those that will suffer the most are capital projects. In what sectors? Usually depends on what the government is biased towards. Because we also the report, I think, from last year or last 2 years, when they were talking about how much was given to health and education, and how much was actually implemented, to what level, to what percentage was the budget implemented. So which particular sectors will suffer depends on where the government itself actually is biased towards. And we can see that so far, this government, the last government, at least for maybe like three administrations, we've not really seen that push in the education and health sectors. So I'll say that they are, the usual suspects. They are going to feel the brunt of this as they've been feeling, and some other sectors too that are not so keen for the government.
Now let me come back to you, Daniel. At what point does debt become a constraint on economic growth rather than a tool for financial development?
It's already a constraint. it's already a constraint. We've passed the point. So this is how dangerous line we are towing if we do not cut something. Our debt stock is so high. You are wondering why do you have so much debt stock, and it doesn't reflect any development, because if you look at the components of the debt stock, a lot of it is around infrastructure, healthcare. So they were not implemented, because if they were implemented, what it would have done, the ripple effect would have been, if you had invested a lot on infrastructure is okay, you can tax more people, because now, even right now, our tax policy makes so much sense. But by the time you break down the numbers, you realize that virtually 75% of people are exempted from the workforce because they cannot.
You cannot tax your way out of poverty.
The only thing that you can make from such people is your VAT, right? Your indirect taxes. So, the reason why the people are not earning as much as they should be earning, or they don't have enough economic power, is because you didn't educate them in the right places. Right, they are not even, the healthcare is a problem, right? Because if an individual spends so much on healthcare and food, whatever is left will make him almost irrelevant to the economy in terms of financial capacity to consume. So what we've done over time has just been spending money as if there's no tomorrow, and we're in the tomorrow now, and the current government is not doing something, it's not doing anything different, right? So, but then yes, you've removed subsidy, people are suffering it, right? People are getting poorer. Now your only option, because you don't want to reduce your cost of governance, your only option is to increase tax revenue and oil revenue. Those are the two ways we make money, right? Oil revenue, you are not increasing oil revenue. There is no state of emergency in quotes to ensure that we move towards 2 million barrels. We are struggling to do a 1.6 million barrels. But then tax revenue, you are looking to bully everybody to pay taxes. So at the end of the day, this is what will happen. Everybody would move under the 75% bracket, right? And they won't be able, and you won't make as much money as you, because it's not like you stop borrowing, right? You're still borrowing. So the other part that you can use as a tool to push more numbers for yourself, that is not being. So either way, it just looks like we are pushing the day of reckoning forward. Everybody's just pushing it forward, and that is what that's what it looks like. Because I can't explain why a country's machinery is bigger than the farm it is operating on. I cannot. It's not just like you buying a tractor for a one plot of land. It doesn't make sense to me, and that is where we are at the moment. Because how we find it so comfortable to have a budget for a particular fiscal year, and education, which is the education and health, which is the most important human capital development plan, right? It's not being touched. Like people look at it and just pass for something that will build the economy. Because now I'm looking at the society that we have now. It's a function of the failures of the last 20 years.
And there's already a gap. If you start educating people today, like if you bring out the budget for health, for education,
it won't even
you won't see the result
until
another 10-15 years
to tell you
how bad it is. There's already a gap. Yeah. There's already a gap. I wanted to say something while he was talking. I have some, it's just an analogy. I have some chickens in my house, that I just keep as pets for the day of, So they are layers, right? And I used to buy their feed. Now, when their feed finishes, I have the option of either buying the layers feed or buying ordinary feed for broilers, or just feeding them whatever. Now, but when I feed them the layers feed, they do lay eggs, sometimes 1 per day. In a week, they do like 6 per chicken. I wanted to say per person. so it's the same idea. If I want more eggs, you feed them what they are meant to be fed, and you get the eggs. If you want more taxes, you develop your country, develop the citizens, give them what they want, let them be more productive, then you can get more money from them. But when you get grants, you get loans and all this infrastructural stuff, and they are not implemented, they disappear into thin air, but you now go back to the same chicken and you say you must lay egg for me by force. From where?
True. From where? That question is for them. From where? Now let's head to the other one, which is the food imports bill that fell to $2.34 billion in 2025, while food's share of total FX utilization dropped from 9.49% to 4.97%. Now, at first glance, lower food imports appear positive, but how do we determine whether this reflects stronger domestic food production or simply weaker consumer purchasing power, Daniel?
I don't know if there's a link, but I think that if we look at it critically, data also came out from the MBS about the GDP, and Agriculture did about amazing numbers, about maybe 3.7% in growth, in real GDP growth. That's if you adjust inflation. It also shows that, okay, maybe we actually did produce more in terms of crop production, right? Of course, we know that the plan around importing so much, right, food in the last 2 years was because of the high inflation we've seen on food, right, and which is okay. You get the difference in that might not be is not significant, because between 2024 figures and 2025 figures, it's not significant. It's just it can be negligible. In fact, from the report, it's even more about how much of FX was used, right? So for us right now, I think that bringing down food inflation was a big conversation, and I think the government has done its part in terms of doing that. However, this is the problem, right? That was the problem also before the previous administration before him decided to say we must start working on a food self-dependency project on food, right? So now, if we go back into that realm where we are doing about $2 billion or thereabouts annually on food, and of course the result is showing food is coming down. When do we stop? When do we say let's go back to the original plan of high food production? Because now the only issue now is not just high food production. There should be security. There should be other issues in value chain. There should also be industrialization around food, because when you look at GDP of Nigeria, food. If I was checking it today, food, trade, and real estate does about 50% of our GDP, right? And I tell you that the calculation around food is also tied to the fact that this food, you get the ones that we produce locally, it doesn't give an economic value to the ones that is imported. So people, when we import food in large quantity and sell, they make way more money than those that produce locally, right? So there is still a value issue here, right? Which is, if we keep towing that line, right, we will only have, whenever there's an issue, for example, in global space again, maybe Russia crisis, we are affected again, imported inflation again. So
because we have higher costs.
Exactly. So higher costs of producing locally. Also, because what we basically do is just raw materials, we just the maize, and we send them out, we export the jobs and import the processed product back in at higher prices. So it's and that's why I will still wonder, right? At least in cabinet, we see the Minister of Finance, right? We see the Minister of Trade and Investment. Sometimes we even see some other ministers, like you get. But then, what is the Minister of Agriculture doing? Because we are in the situation is so bad that it requires conversation. So, but when you see data, GDP comes down and everybody's celebrating 3.something%, you have to sit down and look at data. What does it really mean? It is very, very bad.
And that's why you also have to look at some of the ministers. Apart from agriculture, there are also ministries and agencies that are complementary, that you can call them together and say, guys, we want to have a total list of the major things that are produced in Nigeria. Let's start from there. If it's okay, there's gari, there's yam, there's cassava, there's coconut. You start listing them out. Then you now start looking at what are the derivatives from these particular products. How do we now get to this derivative? Because one product can have a whole lot, like palm kernel, for example, now the palm oil tree, and yet that no part of it is useless. You know, there's always one thing or the other you can make from it. But you find out that we are not doing these things, which is what Daniel is saying, that we have a lot of raw materials, but at the end of the day, where the money is in the finished product most of the time. This 2026, and majority of our gari and everything is still in bags. We are not saying that everything has to be in very fancy packaging, but we are saying that there is a value chain, and why it is called a value chain is because it increases value down the chain. The amount that you sell raw cassava is different from the amount you sell gari. The amount you sell gari is lower than the amount you sell ethanol. And a lot of people don't know that ethanol is gotten from cassava, for example. So I feel that it is time for us to sit down as a country and start looking at this. And I was saying some episodes back, that one of the things that crude oil did to Nigeria and other countries that found crude oil and did not know a whole lot about what they were doing with themselves before crude oil is that it removes the capital, the human capital of the country, and just neglects them. Because people know that they can just go from the soil down to revenue, and that's okay for a lot of governments. So neglecting your human capital for so long now creates an human capital that is not educated, that does not have good health care, and at the end of the day cannot produce. Now, I read engineering, mechanical production. Okay. I'm meant to be in a factory or in a production house somewhere. I can tell you for free that we were 39 in my class of 2005. Maybe one or two persons are working in engineering. Is it that they are in banks, or they are in finance, or you are doing global analyst? Because if the opportunity was there to absorb a lot of us, why will I go and spend 5 years in school to read engineering, then come out and say, I want to go into financials. It's because that opportunity is not there. And if it is there, it's not attractive enough for me to want to dedicate myself to. We have too much in Nigeria not to be able to engage our human capital. We are not engaging them because, I'll say it again, the government knows that from the ground they can get majority of the revenue they need. So they feel, and I'm not talking about this government, all the governments, they feel that, what do we need these people for? We can get the money we need without them.
Which is really, really sad. Now, let me come back to you, Daniel. Could the fact that food inflation is high, right? And now the fact that this data is saying that food imports declined, right? Even when now, can food inflation remain elevated when food imports decline?
So, as I said, that the figures is negligible. Why? Because I think it's 2.3 then 2.4 thereabout. So it is about 7% difference. So it is not. That's what I'm saying. It's not that. It could be a function of pricing. Remember that in 2024, I think the naira was a bit higher thereabout. I think 2025 is a bit. So it might be just in calculations, not necessarily in the quantity of what was imported per time, right? So, and that's basically what I'm saying, that if the policy is still there, which means that in 2026 most likely we'll still have the same kind of numbers, and it has reflected in the way that food prices have dropped, right? At least across board, we can say that it is not like it has dropped significantly, but it is not moving at the pace it was increasing again at 2024 into 2025. The stability is there because of supply that is coming as imports. So going forward, are we sensing? Is there a possibility of prices going higher again? Yes, now, because US-Iran war has caused a bit of friction to the global economy, and prices will start being the volatility and prices will be there. So we are importing, so we are going to be importing that also. So how significant would that be? Would be a function of so many factors. Would be whatever the product we are importing is coming from, and whatever the product is coming from, and the stability of the exchange rate. Those are the things that would determine. But where we are is that we are still majorly importing, and that would not stop for now until prices get to a very reasonable point where an average Nigerian can afford the basic things, basically.
Okay, thank you so much for that one. Thank you so much, Daniel, and thank you. Do you have any other thing you want to add to the conversation as regards to food, purchasing power, and the fact that the figures are just, dancing in our faces?
Dancing as own too. I wanted to say, when you were talking about the imports amounts being going down, that there's also a third angle. When people cannot afford the normal thing, what do? They go for lesser alternative. Now, the lesser alternative in this sense might be small good food, which usually is not calculated with this. So it might also, those figures might also indicate an increase
in
smuggling activities, because now you're bringing in this stuff. People are not buying as usual because they don't have the capacity. So they would rather go for cheaper alternatives. Oh, this oil, this chicken is from so and so place. We cannot guarantee the quality, but it's cheaper. Most people don't. They will just buy it because they just want to survive. So,
and because that's what their money can get at the time.
Them, and we're talking about survival here. So I feel that that's another angle to the lower amount of imported food.
Okay, Daniel, do you have any other thing to add?
So for me, I think I've just heard about the AFDB projection that we are going to be doing 4% this year and maybe decline next year, which is hinged on the high prices. And for us, there's no significant difference in what we are going to be making in terms of high oil prices, because we are not producing enough, and that is another big conversation that I don't know why that we cannot, because we were on this show last year when I was even the one arguing that we've not clocked that number yet, because the minister was even saying that they're going to approach OPEC for 2 million barrels. So what's happening?
What happened?
Maybe there is no fuel to approach.
So the question out there is, what happened if there was a push for us to get to 2 million barrels, and somehow, somewhere along the line, you know, the conversation is looking like it went missing. So the question is, what happened? That is from Daniel. Now, as always, the numbers tell a deeper story, whether it's government debt, food security, economic growth, digital payments, or investment markets. The key challenge remains the same: how Nigeria can build a more resilient economy that is less vulnerable to external shocks and more capable of delivering sustainable prosperity. My name is Divine Alex, and thank you for joining us on today's Business Lens on Rapid TV Abuja. See you on the next episode. Bye for now.